Some dreams are born in the quiet hum of a server, in lines of code that promise a different future. This isn't just a story about digital currency. It's a story about a decade-long battle for legitimacy, a journey from the fringes of finance to the heart of Wall Street. It's a quintessentially American tale of persistence, of believing in an idea so fiercely that you are willing to face down the world's most powerful institutions again and again. This is the story of the Bitcoin ETF, a 10-year odyssey that proves that even the most audacious dreams can, with enough grit and unwavering belief, reshape our world. For over a decade, a revolutionary idea simmered, dismissed by the old guard but championed by a new generation of pioneers. The goal: to bring Bitcoin, a digital ghost in the machine, into the mainstream of American finance. Experts now call the approval of spot Bitcoin ETFs a watershed moment, a historic turning point that finally recognizes Bitcoin as a legitimate, regulated investment asset, placing it on a pedestal once reserved for titans like gold. But this victory wasn't handed over. It was earned through a grueling marathon of rejections, legal battles, and the relentless persistence of visionaries who refused to take no for an answer. Their struggle wasn't just about an investment product. It was about changing the very perception of what money could be. The approval of spot Bitcoin ETFs in the United States on a cold January day sent shockwaves across the globe, fundamentally altering the landscape of international finance. The decision by the U.S., the world's largest capital market, acted as a powerful endorsement, creating a tidal wave of positive sentiment and redirecting massive capital flows toward crypto assets. This landmark event forged a new, regulated bridge for everyday investors. From seasoned Wall Street veterans to families planning for their retirement in Middle America, for the first time accessing the world of Bitcoin was as simple as buying a share of stock. A profound shift that democratized access to what was once a complex and intimidating digital frontier. History will remember January 11th, 2024. On that day, the U.S. Securities and Exchange Commission (SEC), the nation's highest financial regulator, gave its long-awaited green light. It was a moment that crypto enthusiasts had dreamed of for years, a day of vindication that marked the culmination of a long and arduous fight. This wasn't just a procedural update. It was the day the future of finance officially arrived, turning a decade of what if into what is. The digital dream had finally broken through into the tangible world of ticker symbols and trading floors. The story begins much earlier, on July 1st, 2013. In the burgeoning, chaotic world of cryptocurrency, two brothers, Cameron and Tyler Winklevoss, dared to dream. They saw the potential of Bitcoin not as a fleeting fad, but as a revolutionary asset class. They filed the very first application for a spot Bitcoin ETF, a vehicle that would allow anyone to invest in Bitcoin through a traditional brokerage account. It was a bold, audacious move, an attempt to build a bridge between the wild west of crypto and the buttoned-down world of Wall Street. They were pioneers, charting a course into unknown territory, driven by a conviction that they were on the right side of history. Their pioneering spirit, however, was met with a wall of institutional skepticism. The SEC, tasked with protecting investors, viewed Bitcoin with deep suspicion. In 2017, after 4 long years of review, the Commission rejected the Winklevoss application. The reason cited was a familiar refrain. Bitcoin was the currency of an unregulated wild frontier, susceptible to fraud and manipulation. The dream seemed to die on the vine. Undeterred, the twins refined their proposal and tried again, only to be rejected once more in 2018. It was a crushing blow, a clear signal that the establishment was not yet ready to embrace this new digital age. For many, this could have been the end of the road. But while the door seemed shut in the United States, a window opened to the north. In a pivotal international breakthrough, Canada stepped onto the world stage in 2021, launching its own spot Bitcoin ETF, managed by Fidelity Canada. A household name in finance, the move was a resounding success and a powerful proof of concept. It demonstrated that a regulated Bitcoin ETF could not only function but thrive, raising hopes and reigniting the fire for advocates in the U.S. The Canadian experiment provided a tangible example, a working model that U.S. regulators could no longer ignore. The pressure was building. The turning point in the American saga came not from a new application, but from a courtroom. Grayscale Investments, a giant in the digital asset space, tried to convert its massive Bitcoin trust into an ETF, only to be met with the same SEC rejection. But Grayscale didn't walk away. They sued. In a stunning legal showdown, they took the SEC to court, arguing that the regulator's decision was arbitrary and capricious. On August 29, 2023, the U.S. Court of Appeals delivered a landmark ruling, siding with Grayscale and ordering the SEC to reconsider. The verdict was a thunderclap, a judicial rebuke that shattered the SEC's long-held position and blasted open the path for approval. Hope, once a distant flicker, now burned brighter than ever. With the legal and regulatory dams finally broken, the inevitable came to pass. On January 11, 2024, spot Bitcoin ETFs officially began trading on America's most prestigious stock exchanges. The opening bell that morning wasn't just the start of a trading day. It was the start of a new era. The digital rebellion had finally won its place at the table of mainstream finance. The dream, born over a decade earlier, was now a reality, accessible to millions through their 401ks and brokerage accounts. The market's response was immediate and explosive. The floodgates of capital opened wide. Within the first few frantic minutes of trading, an astonishing $1.6 billion in transactions were processed. By the end of that historic first day, the total trading volume had surged to an incredible $4.5 billion. It was a resounding validation, a powerful demonstration of the immense pent-up demand for a regulated, accessible way to invest in Bitcoin. Numbers didn't lie. Wall Street, and indeed Main Street, was ready. The approval of a Bitcoin ETF heralds a new chapter for the entire crypto market, bringing with it a powerful mix of profound benefits and new challenges. On one hand, it represents the ultimate validation. On the other, it ushers in an era of greater scrutiny and regulation. The path forward will be one of navigating this new landscape, balancing the explosive potential of open access with the responsibilities that come with being a fully fledged member of the financial establishment. The most significant implication is the formal recognition of Bitcoin as a legitimate asset. For years, it was derided as magic internet money. Now, it is officially seen by regulators and institutional investors as a real investable asset, much like gold. This change in perception is monumental. It shifts Bitcoin from a speculative curiosity to a potential cornerstone of a diversified modern portfolio, fundamentally altering its role in the global economy. This newfound legitimacy is expected to unlock a torrent of traditional capital. Giants of the financial world like BlackRock, Invesco, and ARK Invest have entered the fray, and analysts project they could channel an additional $11 billion into the Bitcoin market over the next year alone. This isn't just retail enthusiasm. It's the methodical, large-scale allocation of capital from some of the world's most powerful financial institutions, a force that could reshape the market's very foundation. Benefits will also ripple out to the broader crypto ecosystem, as millions of new investors gain exposure to Bitcoin through these simple, accessible ETFs. Their curiosity and confidence are likely to grow. This is expected to drive a new wave of users toward crypto-native platforms and exchanges like Coinbase, which serves as the custodian for many of the new ETFs. The ETF acts as a gateway, an on-ramp that introduces a massive new audience to the wider world of digital assets, fueling the next phase of adoption and innovation. However, this victory comes with a new set of rules. The approval also signals the beginning of increased regulatory pressure. The wild, unregulated days are over. With mainstream acceptance comes mainstream oversight, which could temper the kind of explosive, volatile price swings the market has been known for. This was seen almost immediately as Bitcoin's price. After an initial celebratory spike to nearly $49,000, fell back to the $46,000 range in the first 24 hours. The market is now a different beast, more mature, but also more restrained. Even with this monumental step, the debate continues. While the market capitalization of Bitcoin ETFs has quickly swelled past $162 billion, many traditional investors still view it as a high-risk gamble. In comparison, the gold ETF market stands at a colossal $325 billion, a testament to its long-standing status as a safe haven asset. Bitcoin has won a major battle for legitimacy. But the war for the title of digital gold and the trust of the most conservative investors is still in its early innings. If this decade-long saga teaches us anything, It's that patience is the ultimate virtue, and that the echoes of financial history often repeat themselves. Just as the first gold ETF in 2004 revolutionized investing in commodities, the Bitcoin ETF has now done the same for digital assets, proving that persistence in the face of institutional resistance can eventually pay off. This is more than just a new financial product. It's a game changer. The listing of spot Bitcoin ETFs has carved out a new, regulated, and accessible pathway for millions of Americans to participate in the digital economy. It represents the end of one long, arduous journey and the beginning of another. The story of the Bitcoin ETF is a powerful reminder that the future doesn't just happen. It is built block by block by those with the courage to see what others couldn't and the tenacity to fight for it until it becomes a reality for us all.